For enterprise organizations, managing all your food needs is a tall order. But with Easy Cater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. Easy Cater, your business tool for food. To learn more, visit easycater.com/podcast.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
In business, they say you can have better, cheaper, or faster, but you only get to pick two. What if you could have all three at the same time? That's exactly what Cohere, Thomson Reuters, and Specialized Bikes have since they upgraded to the next generation of the cloud, Oracle Cloud Infrastructure. OCI is the blazing fast platform for your infrastructure, database, application development, and AI needs, where you can run any workload in a high availability, consistently high performance environment and spend less than you would with other clouds. How is it faster? OCI's block storage gives you more operations per second. Cheaper? OCI costs up to 50% less for computing, 70% less for storage, and 80% less for networking. Better? In test after test, OCI customers report lower latency and higher bandwidth versus other clouds. This is the cloud built for AI and all your biggest workloads. Right now, with zero commitment, try OCI for free. Head to oracle.com/strategic. That's oracle.com/strategic.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
President Donald Trump is likely to fire Federal Reserve Chair Jerome Powell soon, a White House official said, and discussed the possibility in a meeting with congressional Republicans on Tuesday night. While the lawmakers voiced support for the move, which will likely roil financial markets and lead to a consequential legal showdown, Trump has not made a final decision and could change his mind, according to the official who requested anonymity to discuss a private conversation. To get more on this from markets perspective, we welcome Ira Jersey. He's chief U.S. interest rate strategist for Bloomberg Intelligence. Ira, how do you think the bond market would react to such a move?
Well, firstly, let me say that this is has not been on my bingo card. So the fact that we're seriously talking about Chair Powell being removed for cause one way or the other is certainly going to roil the Treasury market a bit. And I think that the initial move is going to be a twist steepening of the yield curve, meaning higher yields in the long end because of fears of inflation and continued fiscal largesse, and on the other side, the expectation that short-term interest rates will wind up going down because whoever replaces Jay Powell will wind up being more dovish and more of President Trump's cult of personality in that way. But we have to remember, it's not obvious that the actual Fed funds is going to be lowered very significantly because of the switch in the chair, because you still have more than half the members of the Federal Reserve thinking that they're only going to cut once or twice this year, or maybe not even at all. So the question is, how much power will that chair have? Because the chair is not a dictator in the Fed. It is a committee. There's 12 members who vote. So unless you get someone who is able to convince a majority of the other members of the Fed to cut rates aggressively, you're probably going to see more modest rate cuts rather than, a 200 basis point rate cut in a very short order.
Yeah, and that leads to my question. I mean, could this all change if the Fed decides to drop rates?
Yeah, well, I think a 25 basis point cut, probably wouldn't necessarily placate the president. I mean, obviously, he thinks that interest rates should be much, much lower. You look at the economy, I'm not convinced that that's true, right? Like, I think that there are political reasons why the president wants it lowered. But from an economic standpoint, interest rates actually look pretty appropriate to me. I have my model has the neutral Fed funds rate at around 4%. 4%, maybe 3.75 to 4%. So, 25 or 50 basis points of rate cuts would get us right there. So we're very close to neutral, as far as I'm concerned. And cutting all the way down to say 3% or 2% would risk the potential for faster growth and therefore higher inflation overall, which is one of the things that the market's pricing for. And that's why once the recent headlines hit the Bloomberg terminal on the president's possible action, you've seen the market move, and that's just going to get bigger. So you saw 30-year yields sell off a few basis points. You saw 2-year yields rally a few basis points, so go lower. So you wind up with this twist steepening of the yield curve, and that's not necessarily going to be great for the economy, quite frankly. So even if you have lower interest rates in the short end, long end interest rates are telling you they don't like this, and the market doesn't like this very much.
Yep, and that's kind of what we're seeing there. So we have the 30-year, which we were looking at this morning, touching 5%. We're up at 5.06% of 4 basis points, and that's just in the last few minutes. So just what Ira was talking about. At the FOMC, the folks who vote on these rate things, is that public how each person voted, or is that private?
Yeah, so we do know how everyone votes. Typically, there's a consensus that's built, and then you have 1, 2, occasionally, very occasionally, 3 people do what we call dissent, but basically vote no. It doesn't happen that frequently, but it does happen on occasion. So there's the possibility that you can wind up with more dissents among members of the FOMC, basically people voting against a policy, certain policy actions. Now, something that you haven't seen, at least not in my lifetime, and from what I can remember going back to reading these minutes back to the 1970s, I don't recall a Fed chair ever dissenting. I'm not saying it's never happened, but typically the chair will vote with the majority, right? And but you have had periods of time when you've had 2 or 3 members who've said, hey, we shouldn't be taking this policy action. And the way that we typically view that is like, okay, if 2 or 3 people say no, then it's probably a lot more members, so it's more like not quite half, but close to half. But they don't like to show that there's that much, not animosity, but discord within the committee. But there are people who say, okay, look, if we're going to vote, I'm going to vote no. You vote yes because it's going to pass anyway. So why show that we have a lot of discontent with this particular policy action within the committee?
So, Ira, there is some word that Kevin Hassett could be the early frontrunner to take over Fed chair, but some say his closeness, proximity to the president, that could raise some questions about Fed independence. So what kind of impact would that have?
Yeah, well, that's one reason why I would be very worried about the long end of the yield curve, because we know that independent central banks tend to produce longer-term better outcomes than those that have a very strong political bent. And that's, I think, in part because politicians, generally speaking, want lower interest rates, always want lower interest rates. In fact, Chairman Greenspan was very famous in saying, and he obviously spanned over multiple presidents, said he's never been asked by any politician to raise interest rates. It was always about cutting interest rates. So I do think that you do risk having steeper yield curves, generally speaking, and probably somewhat higher yields, particularly 5, 10, and 30-year bond yields are likely to be somewhat higher. And that will increase the borrowing costs for a large portion of the economy. Because if you think about, that 5-year sector, for example, that's where a lot of people get auto loans and other shorter term financing. And obviously the 10-year tends to be the most important for things like mortgages. So you can wind up with the housing market maybe being affected if 10-year yields were to go up toward 5% again, and you wind up with 8% mortgage rates, right? That will certainly affect, that'll permeate throughout the entire economy. So having an independent central bank, I think, is very important. And, clearly President Trump wants to have more influence on the central bank. At least that's what, such policy action like removing the Fed chair would certainly show that, hey, I want the Federal Reserve to, use my policies, not necessarily an independent policy from what the White House is looking for.
Ira, in talking to your institutional investor clients, is there some replacement that maybe the market would like, or some replacement maybe they don't like? Have we gotten to that point yet?
Well, it does depend on who it is. I think someone like a Chris Waller, who's currently a governor. Chris Waller is he's currently a Fed governor. He would be the kind of he's a bit on the dovish tilt within the Fed, so he would be an interesting person. But he also has deep institutional knowledge, right? He's been on the Fed, the Federal Open Market Committee for quite a while. So I think that he would be someone who he would be relatively benign for the markets. Someone like a Kevin Warsh, who was a Fed governor, over a decade ago. Again, institutional knowledge. He might be a little bit more dovish as well, but also someone who I think has some respect among the investment community, and has a deep track record in working at the Fed. And I think anyone who in that ilk who has been a member of the Federal Open Market Committee or is a well-respected monetary economist, I think would give the market at least a little bit of comfort. But you're still going to see, if Jay Powell is removed, you still will see a pretty big steepening of the yield curve, I think, and higher yields on the long end.
Ira Jersey, always good to talk to you, especially during these crazy times as it relates to the Federal Reserve and kind of how it's being reflected in the market. Let's follow up. We go to Chris Condon, Bloomberg Federal Reserve team leader. Chris, has this happened before? Has a president ever removed a Fed chief?
No, absolutely not. Closest thing to this was in the 1970s. Jimmy Carter didn't like his Fed chief, and so he gave him the job as Treasury Secretary, which is not exactly firing somebody. So no, we have not come anywhere really close to anything like this.
Chris, now this was announced during a meeting with congressional Republicans, and the lawmakers actually voiced support for this move. Did that surprise you at all?
Well, it depends, which Republicans are we talking about? If you have a small group of Republicans, you could probably find a small group of Republicans that would be adamantly opposed to this. You could also easily find a small group of Republicans that are gung-ho for this. So it depends on who these folks are exactly. But, it is still meaningful that you had some gathering of GOP lawmakers and there wasn't anybody pushing back, at least that we know of. It is quite meaningful.
Hey, Chris, I think, this isn't easy to do. That's maybe one of the reasons why it's never been done before. I'm looking at Bloomberg News reporting, talking about this is not an easy thing to do, as Section 10 of the Federal Reserve Act requires, quote, cause for removal. Talk to us about Section 10 and how that can be used.
Right. Okay. So importantly, this language has been tested in the courts for decades and decades, going back to the 1930s, really. And the courts have examined what lawmakers meant by these words when they put it in the Federal Reserve Act and in other laws establishing other federal agencies. It's a pretty high hurdle. Now, it should be said that hurdle is potentially going to be lowered by the Supreme Court for other federal agencies. Trump has moved to fire some FCC commissioners, and the Supreme Court is hearing that case. And there's a lot of speculation that they will allow Trump to do that. But the court, very importantly, has already, in a preliminary ruling, signaled that they are likely to treat the Fed differently, saying it has unique historical qualities as a public-private institution. Legal scholars have interpreted that as a sign that the Supreme Court will protect and keep this for-cause hurdle in place for Fed governors. So if Trump wants to remove Powell from the Fed altogether, he will have to show cause. Now, historically, that's meant inefficiency, neglect of duty, or malfeasance, according to the legal experts. And that's not just, missing a few dollars here and there. This is real neglect of duty, real incompetence, fraud. It's considered a high legal hurdle. So he would still have quite a fight in front of him if he wants to remove Powell from the Fed. Yeah,
so that leads to my question. Is this more about interest rates, or is this more, President Trump also talked about renovations over at the central banks? I mean, what's the leading factor behind this decision?
Right. Okay. So interestingly, I'd point out a couple things here. Powell's term as chair ends in May of 2026, and he has, in some recent, he's been questioned, will he leave, as most chairs do, because he doesn't have to leave, he can stay on as a governor. And he has declined to answer that question. It is since he's done that administration officials have begun to apparently look for other reasons that could satisfy this for-cause hurdle. And they brought up the rehabilitation of two big buildings that the Fed controls, its headquarters, downtown Washington, which are undergoing a very expensive renovation. And they're trying to grab onto this as a cause. Now, many people have viewed this as trying to find some excuse to fire Powell when, in fact, the real beef they have is interest rates. That's what Trump has focused on constantly since being reelected. You hear him almost every day asking for the Fed or demanding the Fed lower rates. So, yeah, a lot of people are saying that's really the center of the conflict. And he's using this other issue as the stick to beat Powell over.
Chris, timing, this is all new to everyone. If President Trump were to remove Fed Chair Powell, would Mr. Powell then, I guess, sue as a private citizen? Or who would file suit against it?
He would, as the party that is harmed, he would have to sue personally.
Okay.
It would be a big deal. It would be expensive, although he's a fairly wealthy fellow. He could, and he has given indication that he would fight. I think we can expect that. One other thing to note, I think that's very important to add, though, even if Powell were successfully removed, the Federal Open Market Committee sets interest rates, not the chair. So it would not mean that a new person in charge would suddenly be able to change the direction of interest rate policy at the Fed.
Now, that's actually good to know. I didn't know that. So there were a couple names tossed around. You had Kevin Hassett, Kevin Warsh, Christopher Waller. Ira Jersey kind of talked about this earlier. How would you describe the difference between them?
Well, the big difference is between all of the other candidates and Christopher Waller. Waller is a sitting Fed governor. He is a Trump appointee, but he's pretty widely viewed as somebody who will follow his instincts as a very experienced economist. He is at the dovish end of the spectrum at the moment on the FOMC. He has suggested that he'd be ready to cut possibly this month.
Right.
There's some speculation about to what extent he's, auditioning for the job. The others, though, are much more clearly considered loyalists to Trump, especially Kevin Hassett. Kevin Warsh, perhaps less so, but he's been pursuing that job for a very long time.
Right.
And while historically a hawk, he has been talking very dovishly of late.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
Wells Fargo seeks broad impact in their communities, focused on supporting customers and communities through housing affordability, small business growth, financial health, and more. Donated over $2 billion to strengthen local communities over the last 5 years. Wells Fargo, the bank of doing. Learn more at wellsfargo.com/say-do. Support includes contributions from Wells Fargo & Company, Wells Fargo Bank N.A., and the Wells Fargo Foundation.
Let your imagination take flight with an AI-powered PC from Lenovo. Whether it's creating digital art, designing new software, or building a portfolio for a future career, our PCs are powered by Intel Core Ultra processors to help students unlock smarter learning and unleash their creativity. That's the power of Lenovo with Intel inside. All you have to do is choose the one that fits your passion. Head to Lenovo.com to shop AI PCs and find your perfect companion. Plus, get 5% off when you create an education account.